Hi friends, today's topic is not for profit organization NPO. It is also known as non trading concern NTC. Profit organization means what? Any organization which is established for the purpose of earning some profit is known as profit organization. For example, sole proprietorship organizations or joint Hindu family business, partnership organizations, joint stock companies. Why they are working? Their main aim is to earn some profit. They come under profit organization. They are also known as trading concerns. Trade means what? Purchasing and selling goods or services is known as trade. Now what they do? They may buy raw material or finished goods. By adding some profit, they sell them to customers. It is known as trading concern. Otherwise, take public libraries. So people can go there, they can read newspapers, magazines, books at free of cost. Or take temples. What is the main aim of running a temple? Profit earning? No. So it is established to spread their religion. Or orphanage centers, Mother Teresa Foundation, Red Cross Society. We can take so many examples like this. Sometimes even sports clubs. Suppose a group of people, they joined together, they contributed some money, they purchased some sports equipment and they started one sports association, sports club. What they do? Whenever they want, they can play. So they come under this category. Then, how they manage their activities? For example, take one sports club. This is one sports club. Say 100 members are there in this. Then 100 members cannot manage this organization. So what they do? From themselves, they elect a group of people. For example, 5 members. This 5 members group is known as managing committee. So organization activities are carried on by this managing committee. They are answerable to these 100 members. It is sports club, no? For what purpose it is established? Only to serve their members. Clear? There is no social service here. But here also, the main motive is giving service to their members, not to earn profit. So remember, any non-trading concern, how it is managed? By a managing committee. We can also call it as trust. Then those people are known as trustees. So trustees are answerable to society, to government, to their members. Right. Now, today's topic is what? Non-trading concern accounts. Then immediately one doubt comes. These are not maintained to earn profit, no? Then when profit is not the main motive of this organization, then why they should maintain accounts? See, first, suppose take one school. School comes under non-trading concern. because the main motive is not to earn profit, to provide education to students. Now, in that particular school, to run that school, say this is charitable education institution. So what they do, they take poor children at free of cost or at a nominal fees, they provide educational facilities to them. They want to help poor children. For that purpose, they established this organization. Then, to run their activities, they have to spend some amount. They have some expenses, like if it is rental building, then every month they have to pay rent. They have to pay current bill, and to teachers they have to pay salaries, and school administration cost will be there. So many expenses like that. Then people who started this school, for example, 10 members started this school. Initially they bring some amount. With that amount they start, but to run the activities continuously, they want continuous funds. So they have to collect some funds. To meet their day-to-day expenses, compulsory they need some regular income. Then how they collect that income? Once you see here, income sources for not-profit organizations. Some sources I have given here. So later we'll come to know what they are. Through these sources, they collect funds. Now, the managing committee of this school is answerable to donors, government, and even to these school members also. They have to account for these expenses and incomes. How money is coming, how they are spending, they are answerable. Then, time to time, they should see whether the funds are enough to meet our expenses or not. If accounts are not prepared, then what happens? With some initial amount they started this school. For 1 or 2 years they can run like that. But assume that there are no enough funds with them. Then can they run this organization? Can they meet the expenses? No. So they have to stop their activities. So they should know whether funds are enough to meet our expenses or not. To know that, every year they should prepare final accounts. Clear? Then they are answerable to government also. If you start any non-trading concern, it is a statutory requirement that you should maintain accounts. Every year you should submit your accounts to Register of Association. So for this purpose, they should maintain accounts. Now, take one profit organization. For example, sole proprietorship. How they maintain accounts? First, they record the transactions in journal. Small firms maintain journal, large firms maintain subsidiary books. Then they classify those transactions in ledger. To check the arithmetic accuracy, they prepare trial balance. With the help of trial balance, they prepare final accounts. At the year end, final accounts contains 3 statements: trading account, profit and loss account, and a balance sheet. By preparing trading and P&L, we will come to know about the profit or loss. By preparing balance sheet, we will come to know about the financial position of the organization. Financial position means what? How many assets they have, how many liabilities they have, what are the value of those assets and liabilities. In final accounts of trading concern lesson, you learned this final accounts topic. Similarly, for non-profit organizations also, we should maintain accounts. Their accounts contain journal. Generally, they don't maintain subsidiary books. Why? Let us see. You know, subsidiary books are total 8. First one is what? Purchase book. What we record here? When goods are purchased on credit basis, then we enter the transaction in purchase book. Now, will they deal with any goods? Why we buy goods? We want to sell them and we want to make profit. And today we are talking about NPOs now. So they are not going to sell anything. They are not going to earn any income. Therefore, they need not to prepare purchase book. When there is no purchase book, there is no question of maintaining purchase returns book also. Similarly, there is no sale for them. So, they need not to maintain sales book and sales returns book. Next, if you take ordinary profit organizations, they entertain credit transactions. They buy goods on credit basis, they sell goods to customers on credit basis. In case of credit transactions, when we have some debtors and creditors, if we want any return proof from them, then we maintain bills of exchange. Then we prepare bills receivables book and bills payables book. But if you take a not profit oriented organizations, generally they deal with only cash transactions. They don't entertain credit transactions. Therefore, they don't prepare bills receivables book and bills payables book. Out of all these subsidiary books, they maintain cash book. It is very important because they too have some cash inflows and cash outflows. They are receiving amounts and they pay amounts. So they maintain cash book separately along with the journal. And if there is any peculiar transaction which we cannot write in other subsidiary books, profit organizations record them in journal proper, no? But non-profit organizations, instead of writing them in this book, they directly enter the transactions in journal book only. So remember, since it is not profit oriented organization, since this many transactions are not there for them, they need not to prepare full-fledged accounts. So generally their accounts contains only these statements. Then after preparing journal and cash book, they maintain ledger. They do have some expenses, incomes, some assets, liabilities. So on each aspect named, they maintain a separate account in ledger book. Next, since they are maintaining accounts under double entry system, to know the arithmetic accuracy of accounts, they maintain trial balance also. Then come to the important topic. Why I am saying important? Because once you compare these two, For profit organization, for NPOs, journal, ledger, trial balance. These three are common. So we are not going to learn any new point here. Then where difference comes? In case of final accounts. If you take profit organization, their final accounts contains trading account and profit and loss account. What is the purpose behind preparing these two? They want to know the profit or loss for that particular current year. But in case of non-trading concern, is there any profit or loss? Will they work for profit and loss? No. When there is no profit and loss, then where is the question of knowing the profit and loss and preparing trading and P&L account for that purpose? Therefore, final accounts of non-trading concern does not contain trading account and profit and loss account. In these two accounts place, we prepare receipts and payments account, income and expenditure account. Then finally, we maintain balance sheet also. Then, to learn these three, you should know some basic points. So, first I will start with those points. First topic is what? Expenditure. Expenditure is divided into two types: capital expenditure, revenue expenditure. What is meant by capital expenditure? If any expenditure is incurred to acquire a fixed property or to expand a fixed property, that expenditure is known as capital expenditure. Okay? For example, school purchased a building by spending 1 crore rupees. This is capital expenditure. Why? Because building comes under fixed asset. They spend 1 crore rupee expenditure to acquire one fixed property. So, purchase of building, purchase of machinery, furniture, computers, land, they come under capital expenses. Then, next one is capital expenditure gives a long-term benefit. Long-term means here more than 1 year. See, we purchased one building in 2000 year. Then school uses that building for a long period, for minimum 20 years, 30 years. So one time they spend expenditure, but the benefit out of that expenditure is spread over to long period. Then it is known as capital expenditure. Clear? The next expenditure is what? Revenue expenditure. Capital expenditure is non-recurring expenditure. Rarely we incur that. But revenue expenditure is a recurring expenditure. Again and again we pay that. For example, in same school, every month they pay salary, rent, electricity bill. All these expenses come under revenue expenditure. So the benefit of revenue expenditure is limited to a short period. Short period means here within 1 year. For example, we paid salaries. The benefit out of that expenditure is only for 1 month. In next month again you have to pay the salary. Clear? Then income. Just like expenditure, income is also divided into two types: capital income, revenue income. Capital income means non-recurring income. Say, to purchase this building, school management has taken loan from bank. Will they take loan daily, monthly or yearly? No. Only for one time. Rare income. So that income comes under capital income. Then what is meant by revenue income? Regular income. In their day-to-day operations, if they generate any regular income, it is called revenue income. For example, school fees. Regularly they get from students. Clear? Then, to prepare these three accounts, the classification of expenditure under capital and revenue and income under capital and revenue is very, very important. Then, next topic is income sources for not-for-profit organizations. Once you see here what I said, to run their operations, to meet their day-to-day expenses, they need some regular income. How that income comes? Suppose you take one sole trading concern. Who brings that money? Owner, sole proprietor. He brings capital. JHF, with a family property, they run the business. Partnership, partners bring the capital. Company, they sell shares, debentures to public. But in case of NPO, they don't collect the money in that way. So, they have some sources of income. What are they? Let us see one by one. First income is known as entrance fee. It is also known as admission fee. Means what? Let us see. See, there is one sports club. 10 members of one apartment, they started this sports club. So, what is the main motive behind starting this club? They want to serve their members. It is not concerned with the social service. They started that organization for their own benefit. Here, there is no question of profit earning. So, they contribute capital, means they put some amount and they purchase some sports material, then they play. Clear? Now, they started with 10 members, but to expand their organization, they may take outsiders also as members. Then today, Ravi wants to enter into this organization. Ravi wants to become a member of this sports club. Then while joining, Ravi has to pay some initial amount. That amount is known as entrance fees or admission fees. Then, this entrance fees is a capital income or revenue income. There is a lot of controversy on this. Some people say that since Ravi is paying entrance fees only for one time to the organization, this is non-recurring income. Therefore, we should treat entrance fees as capital income. But some people argue that no doubt Ravi is paying only for one time. But like Ravi, regularly so many members join in our organization. So to organization, entrance fee is regular income. Daily it comes from somebody. Therefore, it should be treated as revenue income. Then what a student is supposed to do? Listen, in the problem, if there is any specific instruction regarding entrance fees, then student should follow that. For example, entrance fees is to be capitalized. What is the meaning of that? That entrance fees income, we should treat it as capital income. Sometimes he gives 50% of the entrance fees is to be capitalized. What is the meaning of that? Say entrance fees amount is 10,000 rupees. In that 50% we should treat it as capital income. Other 50% we should treat it as revenue income. In the absence of any instruction, then student may treat it as capital income or revenue income. Then while the source is subscriptions. Subscription is the main income source of any NTC. What is meant by subscription? See, in this sports club, say 100 members are there. So sports club regularly they want to spend some expenditure. Then they need regular funds. How they get that funds? These members should regularly pay some amount to this club. That regular amount is called subscription. A member, to continue his membership in any NTC, he should pay subscription to that organization. And as per the policy of this society, sometimes subscriptions will be taken on monthly basis. Every month, member has to pay subscription. Sometimes quarterly basis. Once in 3 months, a member has to pay this amount. Sometimes half-yearly basis. Sometimes yearly basis. It depends on the policy of this society. Generally, subscriptions will be taken from the members on yearly basis. Clear? Then, what is the accounting treatment? Regularly it is coming. Therefore, treat it as revenue income. There is no controversy here, like entrance fees. Subscriptions, always we should treat it as revenue income. Then, next one is what? Life membership fee. See, Murali is one member in this society and he wants to continue as a member for his whole lifetime. So every year he doesn't want to pay subscription amount. He wants to pay total money as a lump sum. Then society fixes some amount, say 10 lakh rupees. Total money as a lump sum Murali paid to society. This amount is known as life membership fee. When a member wants to pay total subscription money at a time, instead of paying yearly, monthly like that, then that income is called life membership fees. Since it is coming only for one time, since that amount is huge, we should treat life membership fee as capital income. Clear? Then, next one is what? Donation. Donation means if any outsider gives some gift to us in the form of cash, it is known as donation. Donation is divided into two types: general donation, specific donation. For example, there is one school, charity, for charity purpose they established this. To poor people at free of cost they are providing education. Since people want to encourage them, Suppose X donated 50,000 rupees. So in question he has given that donations 50,000. Then while giving the money, X is not insisting us to use that money for a particular purpose. Simply he gave that amount. Then we can use that 50,000 rupees donation for any purpose. To provide mineral water facility to children, or to pay current bill, or for maintenance expense, this 50,000 rupees. Then it is known as general donation. If only donation word is given, then you should assume that it is general donation. Clear? Then, what is meant by specific donation? See, this school wants to construct one library. Clear? For this purpose, they want funds. So they requested people to donate some amount. Why donated 1 lakh rupees towards this construction of library? Then here, this donation is known as specific donation. Why? Because we should use that money only for the construction of library, not for other purpose. Therefore, if any donation comes for specific purpose, it is called specific donation. Donation for ground. So only for ground maintenance we should use that money. Donation for prizes. Only for awarding prizes to people we should use that money. Donation for mineral water. To provide mineral water to members we should use that money. It is called special donation. Then what we do generally, if any special donation comes to us, we will create a fund with that amount. For example, when you pay school fees, they give one slip to you, fee slip. If you observe that fees slip, it contains 4 to 5 components like tuition fee, building fund, library fund, ground fund. So observe here, building fund. If any money is collected towards building fund, it is specific donation, and we should use that fund only for the construction or for the expansion or for the maintenance of building. So, if there is any specific donation, what we do? For which purpose we got that money? For that purpose, we create a fund, building fund, ground fund, etc. And that fund amount should be used only to fulfill that particular activity, not for other reasons. Clear? So, accounting treatment for these donations. Specific donation, irrespective of the amount. The amount may be small or large. It doesn't matter. Specific donations, always we should capitalize. Means specific donations are always capital incomes. And general donations. So a student can treat it as capital income or revenue income, his wish. He is supposed to write a note regarding this, just like entrance fees. Clear? Then, next one is what? Legacy. See, we are running one orphanage center. and a rich man wants to help us. Then, when he is alive, he prepared a will and he wrote that after my death, 10 lakh rupees should be given to this particular orphanage center. So, in that manner, through a will of a deceased person, we got some amount. That amount is known as legacy. Is it a regular income? No. Then what we do? We should capitalize it. So legacy comes under capital income. Then next topic is government grant. This is also an income source. What is the main aim of running one non-trading concern? For social welfare activities, for charitable purpose. So government wants to encourage us. Therefore, time to time, they may give some grants. This grant is divided into two types: general government grant, specific government grant. General grant means what? Without a specific purpose, government gives that money to us. So just like general donation, we can use this money for any purpose. Then it is a regular income source. We should treat it as revenue income. And specific government grant. While giving that grant, there is a purpose. Government gives that money for a particular purpose. We should use it only for that purpose. Then it should be capitalized, means it should be treated as capital income. Then next income source is sale of asset. For example, when you are running any NTC, you may have some furniture, some machines. If they are damaged, will you throw them in dustbin? No. We sell them on scrap basis. Then some nominal amount comes to us. That is also one source of income. Then last one is sale of newspapers. So this many sources, non-profit organizations, they get cash. That money will be utilized to meet the daily expenditure. Hope this video is clear to you. In my next video, I will explain about receipts and payments account. Thank you.